Good morning, class. Today, we will be discussing the first unit of our course, which is about the issue of shares and debentures. In this unit, we will be focusing on the issue of shares and explore various questions that will be helpful in your examination. Let's start with an example. A Eastern Company Limited issued 10,000 shares of 100 rupees each to the public for the subscription out of its share capital, payable as 40 rupees on application, 30 rupees on allotment, and the balance on the first and final call. Applications were received for 10,000 shares. The company made the allotment to the applicants in full. All the amounts due on allotment and the first and final call were duly received. You pause the video and read the example carefully. Now, let's move on to the journal entries in the books of the company. The first entry will be the receipt of the application money from the shareholders. The journal entry will be as follows. Bank account Dr 4 lakhs. To share application account 4 lakhs. This journal entry represents the amount of application of shares received from the applicants. When a company issues shares, it receives applications from the public to subscribe to these shares. The company then evaluates these applications and decides to allot shares to the applicants accordingly. In this entry, the bank account is debited with 4 lakhs rupees, which represents the amount received from the applicants on application. On the other hand, the share application account is credited with the same amount of 4 lakhs rupees, which represents the amount of share application from the applicants. Share application account is the temporary accounts that will be balanced once the amount of application will be transferred to the share capital account. The share application account is a temporary account that shows the amount of money received from the applicants on application. Once the shares are allotted, the balance in this account is transferred to the share capital account, which is a permanent account that represents the amount of share capital issued by the company. So, this journal entry shows that the money from the share application was moved from the share application account to the share capital account after the shares were given out. This journal entry represents the amount of share capital that has been allotted to the shareholders. When a company issues shares, it receives applications from the public to subscribe to these shares. After the company evaluates these applications, it decides to allot shares to the applicants. When the company allots shares, it sends a letter of allotment to the applicants, which specifies the number of shares allotted to them and the amount to be paid on allotment. As per the question, the total number of shares are 10,000 and the allotment money is 30 rupees per share, therefore, the allotment money will be 3 lakhs rupees. In this entry, the share allotment account is debited with 3 lakhs rupees, which represents the amount to be received from the shareholders on allotment. On the other hand, the share capital account is credited with the same amount of 3 lakhs rupees, which represents the amount of share capital allotted to the shareholders and increased the amount of capital and make the money due on shareholder. The share allotment account is a temporary account that shows the amount of money to be received from the shareholders on allotment. Once the allotment money will received, the balance in this account will be transferred to the bank account, which is a permanent account that represents the amount of share capital received by the company. Therefore, this journal entry reflects the transfer of the allotment of shares and makes the allotment money due to the shareholders. The second journal entry is as follows. Bank account Dr 3 lakhs. To share allotment account 3 lakhs. This entry represents the receipt of allotment money from the shareholders. After the allotment of shares, the company asks the shareholders to pay the allotment money. The shareholders then pay the allotment money. which is received by the company in its bank account. The bank account is debited with the amount received, and the share allotment account is credited with the same amount. This entry reflects the transfer of the allotment money from the bank account to the share allotment account. In summary, these journal entries represent the transfer of allotment money from the applicants to the share capital account and the receipt of allotment money from the shareholders in the bank account. Yes, based on the information provided, the next journal entry would be for the call of the first and final call money from the shareholders. The total value of a share is 100 rupees, out of which 40 rupees were collected on application and 30 rupees were collected on allotment. This means that the remaining amount to be collected from the shareholders is 30 rupees per share. Since the company issued 10,000 shares, the total amount to be collected from the shareholders is 3 lakhs rupees. The journal entries for the call of the first and final call money would be as follows. Share first and final call account Dr 3 lakhs. To share capital account 3 lakhs. This entry represents the transfer of the first and final call money from the share first and final call account to the share capital account. The share capital account reflects the total amount of share capital issued by the company and called up. The next journal entry will be bank account Dr 3 lakhs. To share first and final call account 3 lakhs. This entry represents the receipt of the first and final call money from the shareholders. The shareholders pay the first and last call money, which the company receives in its bank account. The bank account is debited with the amount received, and the share first and final call account is credited with the same amount. As a temporary measure, the share first and final call account will be balanced. Now the capital has been issued and paid up. As a result, all of the capital is issued in installments and the money is received as paid up share capital. Yes, you are absolutely right. The concept of issuing shares and debentures is an essential topic in accounting and finance. The pattern of the question may vary, but the principles and concepts remain the same. In some cases, companies may issue shares with multiple calls, and the amounts and dates of the calls may vary. It's important to understand the process of issuing shares and the different types of calls that can be made. As a student, it's crucial to understand the basic principles and concepts of issuing shares and debentures so that you can apply them to various scenarios and questions that may come up in your exams or in your future career. I hope this lecture has helped you understand the concept of issuing shares and debentures better, and I'm glad that you found it helpful. If you have any further questions or need any clarification, please do not hesitate to ask. Thank you. Watch the next video on share application with some condition. That will be over and under subscription.